America's gold story just got uncomfortable again. And this time, it is not just about whether a door opens at Fort Knox. It is about what happens after that door opens. Who is allowed to look, what they are allowed to test, what records they are allowed to see, and whether the most famous gold vault in the world is actually ready for the kind of financial storm Washington keeps pretending is not coming. Welcome back. I'm John A.G., and today, this is not a simple gold price story. This is not a gold is missing panic show. This is a confidence show, a trust show, a government accounting show. Because when President Trump starts talking again about checking Fort Knox, the obvious question is not just, is the gold there? The deeper question is the gold clean, usable, unencumbered, audited, market ready, and still fully under America's control? And those are very different questions. One quick thing before we go deeper. My YouTube stats show that many people watch these videos but still have not subscribed. So if this content gives you value, subscribe to the channel and drop any comment below, even if it is just our John A.G., so the algorithm knows you want more of this analysis. Now let's get into the real issue. Trump recently brought Fort Knox back into the conversation by saying he wanted to check whether the United States still has its gold. On the surface, that sounds simple. Open the vault, turn on the lights, let the cameras roll, show the bars, end the rumors. But that is exactly where the problem begins, because showing people stacks of yellow metal is not an audit. That is a photo opportunity. A real audit is not a field trip. It is not a live stream. It is not a politician walking through a vault, pointing at bars and saying, "Looks good to me." A real audit means inventory control, independent verification, testing, assay work, chain of custody review, seal inspection, document reconciliation, ownership verification, and a hard look at every transaction that may have touched those reserves. And here's the part most people miss. The old public story is, Fort Knox has been checked before. But the question is, checked how? Because there is a massive difference between auditing gold and auditing paperwork about seals. If the annual review is basically a review of records that say certain compartments remain sealed, that does not answer the most important questions. It does not prove every bar is there. It does not prove every bar is pure. It does not prove the bars are free of claims. It does not prove there were no swaps, leases, or other transactions. And it certainly does not prove the reserves are ready to be used in a real market emergency. That is why this topic keeps coming back. People hear audit and think it means the same thing everywhere. It does not. In a serious private vault environment, if a seal is broken, the contents cannot just be assumed fine. That compartment or container has to be checked again. The metal has to be verified again. Multiple parties have to sign off. Cameras, controls, logs, and strict procedures matter because the whole value of a seal is destroyed once that seal is disturbed without a proper re-audit. So if there were historical moments where seals were broken, bars were shifted, compartments were opened, or records were adjusted without a complete modern audit afterward, then confidence does not remain intact just because somebody says, "Don't worry." That is not how trust works. And this is where Fort Knox becomes much bigger than Fort Knox. This is not only about whether gold bars are sitting in Kentucky. It is about whether America's gold reserve system is being held to the same level of seriousness that private institutions would be expected to follow. Because if a private depository told customers, "We checked some seal paperwork, and that should be good enough," people would not accept that. They would demand an actual inventory. They would demand testing. They would demand outside verification. So why should the world accept a lower standard from the government holding one of the most important reserve assets on Earth? And the uncomfortable answer is this. For decades, most people simply did accept it. They trusted the institution. They trusted the label. They trusted the official statement. But we are not living in that world anymore. Debt is exploding. Central banks are accumulating gold. Countries are quietly preparing for a different monetary future. The dollar system is being questioned more aggressively. And in that environment, old assurances are no longer enough. That is why the Fort Knox question suddenly matters again. But here's the twist. Even if the gold is there, that still may not be the end of the story. Because the next question is, what kind of gold is it? Most people imagine Fort Knox bars as modern, perfect, globally tradable gold bars. But a large part of the U.S. gold reserves is believed to be old coin melt gold, roughly around 90% purity, not the modern ultra-pure standard that major international markets prefer today. That does not mean the gold is fake. It does not mean the gold has no value. But it may mean the gold is not instantly usable in the way people assume. And in a crisis, that matters. Imagine Washington needs to mobilize gold quickly, maybe to defend confidence, maybe to support a monetary reset, maybe to use gold in some kind of emergency financial operation. Now imagine the market says, fine, but this gold is not the standard we want. It needs refining. It needs upgrading. It needs to be turned into modern, good delivery quality. That is not a small logistical issue. That is a strategic problem. Because refining thousands of tons of gold is not something you casually do over a weekend. There are only limited refining channels. Capacity is limited. And if the United States needed to upgrade a huge portion of its reserves without disrupting the market, the process could take years and years. Some estimates suggest that using available domestic good delivery refining capacity without throwing every other client out of the line, it could take decades to upgrade the reserve stock properly. Now stop and think about that. The world's most powerful country may be holding a massive gold reserve, but if a crisis forced that gold into action, the reserve might not be in the clean, modern, liquid form that the market prefers. That does not mean the gold is useless, but it means the system may be far less prepared than the public believes. And this is where other countries become important. France has reportedly dealt with non-standard gold by replacing it with cleaner, modern gold closer to home. Germany also moved in a similar direction years ago when it repatriated and upgraded parts of its holdings. Many Asian central banks buying gold today are not trying to accumulate old mixed purity bars. They want high purity, globally accepted metal. So while other countries appear to understand the importance of quality, mobility, and direct control, the United States still seems to be leaning on the old assumption that because the gold exists somewhere, everything is fine. But in a new monetary era, somewhere is not enough. The gold must be there. It must be verified. It must be owned. It must be unencumbered. It must be pure enough. It must be deliverable. And it must be usable without a long, messy, embarrassing scramble. That is why a proper audit cannot just count bars. It has to answer whether any of the gold has been leased, swapped, pledged, mobilized, or tied up in transactions the public has never been shown. And that may be the biggest question of all. Because governments intervene in markets all the time. They manage bond markets, they influence currency markets, they protect banking systems, they rescue financial institutions, they use emergency funds, they talk openly about stabilizing certain markets when they believe it is necessary. So the idea that gold would somehow be the one sacred market never touched by official hands is difficult for many people to accept. The public does not need rumors, it needs records. If nothing has happened, show it. If transactions occurred, disclose them. If leases or swaps exist, explain them. If the gold is fully owned and fully available, prove it through a modern process. And if the gold needs upgrading, create a plan before the emergency arrives. Because the worst time to discover a problem with your national gold reserve is during the crisis, when you actually need it. This is where the Gold Reserves Transparency Act becomes important. The idea behind that legislation is not just to walk into a vault and admire the shine. It calls for a serious inventory, proper testing, and a more transparent accounting of transactions involving U.S. gold reserves. That is the kind of process that could begin restoring confidence, but only if it is done with real independence, real expertise, and real public reporting. Anything less becomes theater. And that is why the Fort Knox debate is so dangerous politically. If Trump pushes it casually, people may treat it like entertainment. If officials dismiss it casually, people may assume they are hiding something. Both reactions can damage trust. The only way to handle a reserve asset this sensitive is with seriousness. No circus, no jokes, no staged tour, no vague statement afterwards saying, "Everything looked fine." That will not be enough anymore. Because gold is not just a metal in this conversation. Gold is a confidence instrument. It is a final reserve asset. It is the thing central banks run toward when trust in paper promises begins to weaken. And right now, trust is exactly what is under pressure. The U.S. debt situation is not getting smaller. The fiscal path is not getting easier. Interest costs are not some distant theoretical issue anymore. De-dollarization is no longer just a fringe conversation. Central banks have been buying gold at a pace that tells you they are not relying only on speeches, forecasts, or political promises. They are preparing. So when the United States says, "We have gold," the world may increasingly reply, "Show us properly." And that brings us to the retail side of the metals market, because while Fort Knox is the headline, the behavior underneath the market is also telling a story. Demand has not been perfectly smooth. There are periods where retail buyers rush in, especially after big price moves. Then the excitement cools. Some holders sell into strength, some buyers wait. Premiums shift. Silver becomes easier to buy in certain forms. Gold remains more stable from a premium standpoint because it is a deeper, larger market. But the bigger trend is still clear. More people are paying attention to physical metal than they were before. That matters because the public is not just buying metal for speculation anymore. Many buyers are looking at it as savings outside the system, insurance outside the banking structure, a hedge against currency weakness, a way to hold something that does not depend on another person's promise. And that mindset is spreading. Some traditional holders are selling silver into higher prices. At the same time, new buyers are coming in, including buyers with a cultural background where gold has always been understood as real savings. That is an important detail. In the West, many people were trained to think of gold as old-fashioned. In other parts of the world, gold never lost its status. Now the West is remembering what the East never forgot. But silver adds another layer. Silver is cheaper per ounce, more accessible, and more volatile. It can attract retail excitement fast. It can also frustrate buyers when premiums move or when the price goes sideways. Right now, some forms of silver are available with lower premiums than during hotter periods, especially common bars, rounds, and junk silver. That does not mean price cannot fall. It means the physical market is not in the same panic state it was during past surges, and that distinction matters. A high gold price does not automatically mean panic. A Fort Knox headline does not automatically mean gold is missing. A silver premium shift does not automatically mean a shortage. The job is to separate drama from structure. But structure is exactly what makes the Fort Knox story so important. Because if the audit question were only a conspiracy topic, Washington could ignore it forever. But if the issue is reserve quality, transaction transparency, chain of custody, market readiness, and national credibility, then ignoring it becomes harder. And here is the real cliffhanger. What if the audit happens, and the gold is there, but the public still does not get the answer it needs? What if officials show bars, but not transaction history? What if they confirm inventory, but not purity? What if they open compartments, but avoid a full assay? What if they say the gold exists, but do not explain whether it has ever been swapped, leased, or pledged? What if the question changes from, is it there, to, can we actually use it? That is the part the headlines are not ready for. Because the most damaging outcome may not be an empty vault. The most damaging outcome may be a half answer, a vague answer, a political answer, a confidence answer that creates more questions than it solves. And once that happens, the Fort Knox story does not go away, it grows. Now, to be fair, nobody should jump to conclusions. There is no need to claim the gold is gone without proof. There is no need to assume every official is lying. There is no need to turn this into a cartoon. The responsible position is simple. If the reserves are real, clean, complete, and unencumbered, then a serious audit should strengthen confidence. So why not do it properly? Why not bring in independent experts? Why not publish a modern inventory? Why not test a meaningful sample? Why not disclose the transaction history? Why not explain the purity issue? Why not create a plan to upgrade old gold into current global standards over time? Because in a world where central banks are hoarding gold, reserve credibility is not a side issue. It is national financial armor. And the armor should be inspected before the battle, not after. That is the key point investors should understand. Fort Knox is not just about the past. It is about the future. If the dollar system remains strong forever, maybe this never becomes urgent. But if pressure builds, if confidence weakens, if foreign central banks keep diversifying, if debt keeps rising, and if markets begin demanding harder collateral, then the quality and transparency of America's gold reserves may matter more than anyone in Washington wants to admit. That is why Trump's comment is not just a political soundbite. It opened a door. And now the question is whether anyone has the courage to walk through that door with a real audit, not a show. For gold and silver investors, the takeaway is not to panic buy. It is not to chase every headline. It is not to believe every viral claim. The takeaway is to watch what governments do when trust becomes expensive. Watch central bank buying. Watch repatriation moves. Watch legislation around gold reserves. Watch refinery capacity. Watch whether official institutions begin treating gold as a strategic asset again, not just a relic locked behind a famous door. Because markets can ignore trust problems for a long time. Then suddenly, they cannot. And if that moment comes, the world will not care how many press conferences were held. It will care what is real, what is liquid, what is verified, and what can be used. So here's my question for you. Do you think America needs a full modern audit of Fort Knox, including purity testing and transaction history? Or do you believe the official assurances are enough? And if the audit did happen, what do you think would be the bigger surprise? Missing gold, low purity gold, or gold that is technically there but not fully free? Drop your thoughts below. Subscribe if you want straight, serious analysis without the noise. I'm John A.G., and this Fort Knox story may look like an old rumor, but the real issue is much bigger than a vault. It is about trust, transparency, and whether the world's biggest financial power is actually ready for the next monetary reset.